Good morning, everyone. We'll just give everyone about 20 seconds or so to jump online and settle in. So sit tight, we'll be back with you very shortly. I can see people joining the webcast right now. Okay, good morning, ladies and gentlemen, and thanks for joining us today for this Credit Clear shareholder and investor briefing. My name is Warwick Lace and I'll be facilitating the session for you today. Today we're joined by Credit Clear CEO David Hentschke, Chief Product Technology Officer Jason Serafino, as well as ARMA CEO Andrew Smith. We have the latest quarterly results to go through, and we'll be providing a quick update on the Techub integration, as well as the ARMA integration. And Jason will also go through the digital platform for you and some of the things that the team has been working on in the past few months there. We'll take questions as we're going through, so feel free to pop in any questions that come to mind as we're going through. We'll answer as many of them as possible. Yeah, there's been heaps and heaps going on at Credit Clear over the last 2 months. So several exciting new opportunities being rolled out as we speak. So with that, over to our CEO, David Hentschke. David?
Thanks, Warwick, and thank you to all shareholders and investors that, taken the time once again to call in today. So today I'll be presenting our quarterly results, but before we really get into those, I wanted to provide an overview of Credit Clear. For those, there's always a couple, a few on the call that are not really familiar with our story, so apologies to the others, but really Credit Clear is a technology company, and we build and deploy solutions that really vastly increase the effectiveness of customer interactions. Now, our technology is proving particularly good in collections and receivables management, where it's, we're finding it significantly outperforms traditional methods. Now, we're leading the industry in using behavioural analytics and artificial intelligence really to optimise and uplift collection rates, as well as significantly improve in customer experience. Now, Jason's on the call today and he's going to spend a bit of time later talking about that. We believe there's certainly been a significant shift in how customers pay for products and services. So if you think 10 or 20 years ago, most people would have, maybe 5 or 6 regular payments debited off their bank account. Now this would be, mortgage, car repayment, insurance premiums, utilities, the like. Now today, almost everyone has a dozen or so payments. And particularly as businesses design services and products, oh, excuse me, sorry about that, it was my chairman calling. Products, maybe, hopefully I've got my shirt all done up. Getting back there, businesses today are really designing products and services, really try and nurture long-term customer relationships, really based on, the subscription type services and installment-based payments that you're seeing. Think Netflix, Afterpay, and the like. Now, many of us, and particularly the millennial generation, rarely buy anything outright anymore, nor use credit cards. There's a real aversion to the high-cost credit card. So a growing number of everyday purchases are done on this installment subscription basis. Now, as a result of this, we're really seeing personal commitments and debt levels rising, and businesses around the world are really grappling with how to manage the situation while ensuring they maintain this enduring relationship with their customers. Now noting, the vast majority of late paying customers, they're not bad people, nor in significant financial difficulty. It's really a point in time when they invariably miss a payment due to, short-term cash flow issues that we've all faced. And as we're seeing more often, they're deferring or missing the payments that only offer sort of limited and clunky payment options. Now, this is really part of a, major industry transformation globally on how end customers interact with businesses and their expectations around this experience. Now, customers today expect, and fair to say, they demand that organisations engage and treat them really as individuals with understanding and empathy. and they want simple and intuitive phone apps to manage most of their tasks. And they certainly don't want the embarrassment and the hassle of someone phoning them chasing an overdue payment. Now, the opportunity for Credit Clear is that the receivable management industry is really stuck in the past century. Sending letters and making phone calls. There's limited use of data analytics to really personalise communications, limited payment options, and really providing an overall poor experience. So after many years of serious underinvestment in the collections industry, these old ways of working are simply not capable of responding to the challenges businesses face today. I'll hand over to Jason now, our Chief Product and Technology Officer, and Jason will explain, the technology in a bit more detail and the superior results that Credit Clear is achieving for our clients. So over to you, Jason.
Yeah, thanks, David. So as David mentioned, our technology is proven to be more effective than traditional methods, producing very high levels of customer engagement, resulting in higher collection rates than using the traditional methods of calls and letters. And over the past year, we've conducted a number of scientific experiments to validate this, and I'm delighted to say that the results that really are incredible. They're on your screen. I'll cover a few of the key highlights. So our core proposition is that an AI-driven adaptive workflow that sends customized communications based on the individual customer's behavior can deliver significant improvements. One opportunity to test this was with a major fintech lender, where we replaced a 4-step digital workflow where everybody got the same message with a 30-day adaptive workflow that responded to the individual customers. And we saw a remarkable 3-fold increase in collections, particularly in the smaller debt bands. We then had a second opportunity to prove it at scale with a major energy utility who'd been told by the regulator that they couldn't pass debt to an external debt collection agency during COVID. So they had this rapidly expanding debt portfolio, but were unable to follow the traditional processes. So we implemented a white labeled, non-invasive digital collection process, which interestingly was then compared to their existing collections process, where they sent part through that and part through us. Their traditional process, making phone calls and sending letters, and our digital platform. And the result was a fantastic outcome, where the pure digital process outperformed the internal team by 40%. So we then went on to develop our own case study on the bottom right-hand side there. And with this one, what we did is a scientific approach to this. We took a placement of debt from a large Australian water utility at 28-day debt. We took half of it and we gave it to a team of experienced and skilled negotiators to run a traditional collections process, sending letters and making phone calls. The other half we put on our digital platform, and no phone calls, no letters. It was a pure digital play. And really, quite remarkably, the pure digital play collected 23% a higher collection rate than our team could on the phones. So that's 3 proof points, very significant proof points on the efficacy of our platform. Very, very strong results. Other highlights here I want to call out is NPS. We're really proud of this one. For context, the major banks in financial services are probably sitting at about 10 and 15. The top organisations in the world, Apple's at +54. We're in the context of asking people at the end of just chasing them for debt. They've just made a payment. Would you recommend us to a family or to a colleague or friend? And yet we've got this +44 rating, which is phenomenal. It really does demonstrate just how positively customers view the Credit Clear digital platform. Finally, the other big call out is using artificial intelligence and machine learning. Our next best action model delivered a 150% uplift for a large toll operator. And this experiment, along with others, demonstrated real commercial benefits and helped Credit Clear to win the award for the best use of AI by a fintech at the recent Australian Fintech Awards for 2021. Extremely proud to win this award. Really validates our leadership in the space, and a space where clients are telling us that delivering these actual proof of the capabilities is really separating us from others who could only dream of that. So thanks for your attention. On that note, back to you, Warwick.
Jason, maybe just a quick question that's come in from Sean, wanting to just get a feel for the moat is the word he's used. What's the sort of the protection? What's preventing organizations from trying to build this technology themselves? And you know, maybe just give us a feel for the protection that we have over the technology.
Yeah, certainly. Yeah, so we've invested tens of millions of dollars in this space, and so there's a big difference between just sending a message, you know, and maybe putting a link in the message and collecting a payment. Maybe that's progressive 6 years ago when we started. But those investments that we've made are very significant in building out these very sophisticated capabilities of these long workflows that are responding to the customers. This is difficult to do. We've got a big footprint into AI and machine learning. It's very difficult to do. And our champion challenger testing, where we can roll out different workflow treatments and scientifically compare them. You put all of that together, and that's really what a really progressive modern digital play is about. That is a very, very significant, you know, technology investment in play. So that's not a capability most clients can build themselves.
Rachel asks the question, do you have a feel for the efficiencies that can be gained by being a digital first company, but in the sort of the traditional and late stage collections? Has that been sort of measured yet? What's the uplift that we can expect because of taking a digital first approach?
Yeah, there certainly is uplift across that whole life cycle. So we're really interested in using digital first and digital early, but using digital in collaboration with the phone calls, you know, and traditional methods is really powerful. And even late stage, we've got a big application there as well. At every stage of that, we've measured to see that digital does get really good cut through. It very much, the specific uplifts very much depend on, you know, on the particular customer and the particular age. But we've got a couple of experiments there. You know, we measured a 5% uplift, a 17% uplift. We've got that 23% uplift. So these are all significant numbers at every stage of that life cycle.
Very good. Thanks very much for that, Jason. And we'll go back to David now to continue with the Q2 results.
Yeah, thank you, Warwick and Jason. That was terrific. Now for the financial highlights. Really, the last quarter ending December 31, 2021, seems a while ago now. This was really another period of strong growth for the company, with all our key metrics, as you see displayed on the screen, performing strongly. But you know, there's still some lingering COVID impacts. I know Andrew might touch on this a bit later, but I'd certainly in particular like to highlight that, you know, total digital payments of 7.6 million through the platform, up another, you know, 57% on the previous corresponding period. You know, it is a really great barometer for us, for, you know, the adoption of the platform. The strong growth on the prior corresponding period, particularly, you know, digital revenue at 85%, and traditional to digital revenues, you know, tracking at 162% is really pleasing. If we flick to the next slide, I just really want to say, you know, the financial highlights I just covered, you know, were really pleasing growth, but it's really our operational performance in the past quarter that, you know, was particularly exciting for me in particular. And I believe that Credit Clear has sort of delivered its strongest quarter ever. And, you know, for shareholders, these results operational results that we saw in the last quarter will start to flow through the financial highlights in the remainder of 2022 and beyond. You know, why am I so bullish? Well, really, you know, as I've just shown, the core growth is tracking nicely, and it can already be seen the numbers. You know, we've added another 28 clients in 3 months, several of them significant organisations and among the largest and fastest growing in the respective industries. But it's really the acquisition of ARMA Group Holdings, which we've announced during the quarter and looking to complete this week, that will deliver another surge in growth and volume of payments being processed through our platform. And just like, you know, Credit Solutions has provided the company following their acquisition in late 2019, ARMA's a much bigger scale. So, you know, we're really excited what we're going to see coming through. And Andrew will be able to talk shortly in more detail about that. The ARMA transaction in itself, like I said, is a highlight, but it was far from our only highlight. So during the quarter, we've also signed a partnering and teaming agreement, which we announced with Techub. And Techub's a South African large debt collection agency. And they actually did a global search looking for world-class digital technology capabilities. And they actually chose us to partner with us, particularly on our AI capability. So that's another fantastic validation for us of our capabilities. And Jason and his team are working to go live with that pilot over the coming month. Finally, winning the best use of AI, the FinTech Awards, it cannot underestimate what an achievement that is, and really validating, like Jason said, our leadership in this space. Moving over, a bit more detail on our revenue for the quarter here, and probably the first call out is, the seasonality of quarter two with the reduction in collection activity over the Christmas period. Now, this reduction is typical. However, compared to the previous corresponding period, we've achieved a 56% uplift, which we believe is a great result given the conditions. And when we look to add ARMA and Techub, and as we anticipate, that we'll see further easing in COVID-related restrictions, we're in terrific shape for a bumper year. If we flick over, so drilling down to really the digital component of our revenue, it really highlights our year-on-year growth. And like I said, with ARMA on board, we're gearing up to convert a much larger client base, being the ARMA client base, away from their traditional collection methods and onto our digital platform. So there's a good segue, I think, into summarising the ARMA transaction before I hand over to Andrew. I briefly mentioned, and I've said before as part of the presentations leading up to this acquisition, but Credit Clear has really proved with the acquisition of Credit Solutions, which is a traditional debt collection business based in Adelaide, that we purchased back in December 2019. And we proved that we can successfully overlay our digital technology on a traditional debt collections business. Now, this has really contributed to the growth that we've been enjoying. And we're certainly confident that the acquisition of ARMA is even better, it's even a better deal, and will add value to Credit Clear, and really for three main reasons. Firstly, it fast tracks our revenue growth and provides a significant earnings uplift through the digital conversion opportunities. Now, ARMA's FY21 results were strong, 6.4 million normalised EBITDA from about 15.5 million revenues. And on the FY21 pro forma basis, combined with Credit Clear, we're at about a $26.5 million business with normalised EBITDA of 3.9. And I must say, and Andrew will touch on this too, FY22 is really shaping up to be even stronger. And ARMA produced some great quarter one results at 2.4 million EBITDA from 4.8 million revenue. But more importantly, ARMA has the digital contact details of well over 65% of the end customers, and over 80% have at least either an email or a mobile phone call to make contact with. So that gives us a really large and attractive opportunity to convert to our digital solution. By comparison, Credit Solutions, when we purchased them, held only around 40% of the digital contact details. And that's a lot to do with the client mix, where Credit Clear Credit Solutions traditionally had a lot of government-based agencies, local councils that never collected that data at that time. Second, it really completes the geographic coverage for us across Australian and New Zealand markets. Now, ARMA is based in Sydney and really provides established access to the New South Wales market, as well as they've got a few clients in New Zealand, so we've got a good beachhead into that market. And these are really markets that Credit Clear has had limited presence. So ARMA's bringing an additional 400 plus clients across new industry segments, and you know, there's a great opportunity not only to convert to digital but also cross-sell and upsell further up the collection chain. And thirdly, and in particularly, and Andrew's on the call now, but they have the best sales team. They're known to have the best sales team in this industry. So, you know, it's really validated by the incredible growth over the past 7 years since establishing only back in February 2015. Now, the total consideration for the acquisition is $46 million in cash and scrip, plus there's an earn-out based on the digital conversion of their client base over the next 12 months. Now, Credit Clear's already successfully completed a 25.5 million raise in 2 tranches at 40 cents, and that was from the institutional investors. And we currently have a $4 million share purchase plan for existing shareholders still running, and that'll close on the 18th of February. So we're certainly excited to have ARMA to join the Credit Clear group because we see considerable upside and value creation from this deal. So I really encourage shareholders to seriously consider the SPP on offer, as we believe this is a significant discount to our near-term future value. Just looking quickly at the synergies with ARMA, you know, we're really, they're very compelling because, you know, way down to, you know, we have complementary clients across industries, and there's only really a couple of overlapping clients, and it allows us to extend our reach, as I said, into new sectors and geographically enhance our coverage. And the opportunity to cross and upsell, like I mentioned, is quite enormous. Just flick to the next slide. The takeaway from this slide is that the acquisition of ARMA will more than double Credit Clear's revenues and really make our combined group cash flow positive. Now, this gives us, you know, the real ability now to invest our positive cash flows into international growth and further development of our technology without burning up cash reserves. So, you know, we've come a long way in the time since listing. We are now an established cash flow positive business with technology that has been commercialised in multiple jurisdictions and strong operational capabilities with the resources to scale quickly. I might now hand over to Andrew for his comments and, you know, a bit of discussion about the priorities he sees in the coming months. So over to you, Andrew.
Yep, thanks a lot, David. And hopefully my sales team aren't listening. They might be negotiating their salaries if they think they're the best sales team in the whole of the industry, but we'll keep them grounded. First of all, appreciate being part of the shareholder group. Effectively, once this deal is closed, we'll be a significant holder of shares in CCR, considering a big part of our business is being rolled into the group. So firstly, I just wanted to talk about why we saw this joining Credit Clear as such a wonderful opportunity for ARMA. We've always seen ourselves as a bit of a thought leader in the sector, providing a more modern approach to debt collection through empathetic conversations when we speak to our customers, less threatening, less harassment, as sometimes this market can get a bad reputation. And why I see this as another great opportunity is I think that up until we joined Credit Clear, we felt very threatened about the disruption of technology within our sector. Like Dave said, we're well and truly behind the 8 ball, I think, as a collective, where we haven't necessarily embraced AI and technology in the same way other sectors of the market have. So, you know, this is a huge market with, you know, more than 500 debt collection agencies servicing a sector that sort of looks like it's about $2.5 billion. So even ARMA and Credit Clear combined, our turnover is only 1% of that sector. So the opportunity to start to win a greater market share in this sector is wonderful. And what fills me with confidence is in the week preceding the announcement of the deal, I personally spoke to our top 20 clients, and all of them were overwhelmingly excited about the opportunity to leverage this new relationship and roll out some technology into their current workflow. And that was outside what we're doing already for them. So, you know, traditionally ARMA has operated in that sort of 90-day plus space in helping with third-party collections, whereas they were looking to incorporate technology earlier in the piece, where, you know, they might be looking at a 0 to 45-day first-party solution, or even looking at incorporating us where they had their own collections team supported a bit better with collections. I mean, the other thing that's happened in the last couple of years is COVID's driven a lot of extra traffic into our customers' call centres, not just customers, but the market call centres. And there's been an overwhelming demand for additional support through a business BPO provider, or even overflow in terms of their customers asking for financial hardship assistance. On top of that, the Royal Commission into Banking and Insurance has driven this change across the sector, where the focus is back on the experience of the end customer, rather than necessarily just the financial outcome of that experience. And, you know, using a technology solution that has NPS scores of you know, above 40 is just such an incredibly strong story we can take to the market and drive new opportunities through this group and CCR's future. So, I mean, first of all, we're just overwhelmingly excited to be part of this journey. I know that I was very nervous as running a traditional collection agency, is what could happen as Credit Clear started to disrupt the market. And although, you know, we're definitely a tech business, I see us as a debt collection disruptor, where, you know, we're combining a hybrid approach, leveraging, you know, wonderful artificial intelligence driven collections strategies through the digital program, supported by, I think, what we consider is the best in breed over the phone customer service representatives. So when someone really does need to speak to speak to an operator to try and solve one of their financial challenges, then we can back that up with great people on the phone that are all locally based, that are all well experienced and trained, and we're going to protect our clients' brands first and foremost, our brands first and foremost, and hopefully deliver, you know, industry-leading recovery rates, supported by a wonderful customer experience. So it's probably enough from me today, and I look forward to speaking to you again in the near future. Unless there's any questions.
There've been a couple of questions. One was submitted before the session started. Just as, will ARMA change its name to Credit Clear now?
Look, that's not the case in the short term. We see ourselves still as a significant different brand to Credit Clear. We just will enable us to use Credit Clear technology within our existing processes, and perhaps upsell and cross-sell the credit solution technology within our existing customer base and also the new customers. But I mean, I'm obviously well attached to the ARMA brand, considering it was something that we founded and would love to see continue. So in the short term, we'll continue to run under the ARMA brand in terms of our group, and upsell and cross-sell the credit solutions digital offering either under our brand or individually.
Another question in from Ian, just relating to the, you mentioned sort of the top 20 customers that you spoke to. Yep. Ian's keen to understand what the addition of ARMA's customers does to Credit Clear's focus on those large marquee clients. So maybe just a bit of a flavour for some of those, for the top 20 list and the types of names that they contain.
Yeah, look, we've got a huge coverage in the digital space, in the collection space, across a lot of gyms and membership organisations, whether it be Fitness First, Anytime Fitness, Good Life, and as you can imagine, a lot of the communication that we would have with those organisations, we actually have an email address and a phone number. So those type of brands are perfect in terms of, you know, the millennial generation who seem to be a high proportion of gym goers, and they're really excited, and we have presentations booked in to present to those organisations in how they can incorporate the Credit Clear digital solution and provide, you know, a better customer experience. A lot of those organisations are fully supportive of seeing if we can replace some of those traditional phone calls and letters with a digital solution. So that's just an example of one of the organisations or the sectors that we're supporting. Another sector that is once again quite traditional in terms of the approach is the insurance sector. So we've got quite a lot of insurance customers, and you know, if someone's involved in an automotive accident, then the last thing someone might want is to have a phone call from a collection agency asking them to provide their insurance details, or in fact, if they're uninsured, talk about you know, paying for the damage associated to our client's vehicle. So what we're trying to do in that sector is offer solutions which make it less intrusive, where if we're able to capture the email and the phone number at lodgement stage, provide a solution that it allows those customers to provide their claim number of their insurance details plus a version of their events, and then we can seamlessly contact their insurer, or in fact, if they're uninsured, get an understanding of what their financial position is and whether or not they're able to set up a payment arrangement to start paying that off. So there's some incredibly good applications across a diverse range of industries, and it just so happens that ARMA have lots of clients across those sectors with a very high percentage of digital contact information, which is effectively what's needed to deploy the Credit Clear software.
Very good. We've got a few more questions, but let's we've also got a few more slides. So let's go back to David, and we conclude the presentation, and then we'll come back for some general questions that I can see are coming through.
Yeah, thanks, Warwick and Andrew. That was terrific. I just want to make it clear when we're talking about that. As I said, Credit Clear at its heart is a technology company, and now we're going to deploy we've been deploying our technology through multiple channels. And one of those channels, the distribution channel, are wholly owned debt collection agencies, one being ARMA, one being Credit Solutions. We're also deploying our technology in other debt collection agencies here in Australia, and we've got a strategy to deploy our technology with debt collection agencies and potential clients in international markets, and hence that's what I want to talk to now. So, you know, it's a multi-channel approach to our distribution. Some of it will own, some will be partnerships, licensing agreements, etc. But it's all about, you know, coming up with the most appropriate model at the time to capture the share. Like I've said before, it's a real first mover advantage. Now, as far as the Techub, and Techub's one of South Africa's largest, and they're really a most technologically advanced debt collection agency. Excuse me. And as I said before, they've identified us as being best in class technology for the digital communications and payments, and particularly with the use of our AI. Excuse me. Lingering COVID after 3 or 4 weeks. And you know, they saw us the best in the world, and they searched the globe for this type of stuff. So this has been really a significant milestone for us to get this agreement. Now, what will happen? We'll see that our digital platform being deployed across their blue chip clients in not only South Africa, but they plan to expand all through Africa, and they've also got clients in the UK and US. Now, Techub and Credit Clear, we're working together right now to go live in the next month with a pilot, and assuming that's successful, and we've got every belief that it will, Techub would look to roll out more broadly across what is actually a multi-billion-dollar portfolio of account receivables. So if I put this into some context, Credit Clear and ARMA combined currently manage around 500 million in receivables at any time. Techub's currently managing closer to 2 billion Australian dollar equivalent in receivables. So this agreement will see us earn commissions and revenue and a revenue share on all payments made that are identified through using our platform. Now we see considerable potential with Techub agreement, and that potential is certainly a large source of revenue and really a template for other partnerships globally, which we're already in discussions with. Talk about other markets. We've in the US, we've maintained a licensing relationship. This has produced some modest income for us, and it's certainly allowed us to gain some insights about that market, given the size of that market. And this will be ahead of some more involved position, which really remains important for our overall international expansion plan, which will be progressing more through 2022 and into FY23. In the UK, we've established an exploratory presence. We're now considering the best way to enter that market. We're looking at some specific opportunities, and we'll certainly let you know soon when decisions are being made. Beyond those, we regularly receive expressions of interest from providers in various countries around the world, and we'll assess them on a case-by-case basis. Really, to conclude, everything we've spoken about today, the technology gains, the AI awards, the ARMA acquisition, the Techub agreement, these have really only happened in the past 3 or 4 months. It's taken some time to get the technology developed and build our capabilities, which Jason went through. And this will be a continuous journey of investment to maintain our competitive advantage. However, we're now lined up and ready to go for 2022, and it's going to be a huge year for our company. So I think the market is about to discover us and really start to understand the opportunity that Credit Clear has in front of us. So that concludes my presentation, and I look forward to some questions.
We'll take that disclaimer slide as read, and let's rattle through a few questions. Now, the first one is for Jason, I think. It comes from Ross. He says he understands the fact that the strategy can be tailored and the message can be tailored, but just ask for a bit sort of specifics. How does that actually happen in practice?
Yeah, so the entire platform is configurable. I mean, it's a cloud-based platform that has been built to be, completely configurable for each client, each treatment. So the messages themselves, all the content is completely tailored to that particular customer and that particular workflow. But the workflow itself is also very sophisticated in terms of, what's the sequence of steps that we'll go through. It's all branching logic, and we configure all of that for that particular use case. We have the AI models that are driving kind of behavioral analytics through that process, the channels that we communicate on. So it is all entirely configurable, and we can therefore deploy it into all sorts of different use cases, including the kind of use case that Andrew was talking about, automating, as we've done with a very large insurer, automating the process of engaging with a third party in the insurance space, which is a very different kind of context to a debt collection space. So it's if that answers your question, it's is entirely configurable process.
Thanks. A question from Wayne, also for you, Jason. The typical response or open rates from SMSs or emails, is there? Can you give us a flavour for what that might look like through a campaign?
Yeah, look, high is the answer to the question. I mean, we've learned a lot of lessons about how to make that engagement really high. Depends on the age of the debt and the particular context, but 60%, 80% engagement rates on the workflows is normal, common. Which if you think about traditional space of trying to make phone calls, I mean, it's a very high engagement.
Yeah. Question for David and Andrew, probably. In the next year or two, it comes from Johan. In the next year or two, where do you see the digital percentage of total revenue? What would an expectation be?
Well, much higher. I think the world, as you know, is shifting to more and more digital. COVID has actually, I think, brought the world forward about 10 years in the adoption of digital, particularly through the more conservative parts of business like collections industry. So, you know, I'd like to think that, and who knows, you know, we're not putting it out there, but is it 5 years or is 10 years where I believe you'll see very, very little human contact? I think there will be still a need for it, and Andrew will be able to talk through this, particularly on the more difficult cases and hardship. And you'll actually be, our idea would be that you'd actually put more effort into those calls to ensure that, you know, you're really providing a really good and empathetic customer service there. I don't know, Andrew, what's your view?
Yeah, look, I sort of see this transformation within the sector a little bit like the credit decisioning transformation, being that a lot of us from ARMA used to work at Dun & Bradstreet, who are now known as Ilion, and credit decisions used to be made quite manually, and then they brought in some digital decisioning tools to automate those decisions. And you know, if you go and apply for a credit card, or you know, you apply for a personal loan, or you know, you go and apply for a new phone, all those decisions are now made digitally, right? So you know, apart from the exceptions. So what we will probably see in the future is that nearly all collections processes will be digital, apart from those exceptions. So how quick it takes to get there, I'm not sure, but you know, I'm telling you, up until not too long ago, I was pretty nervous about, you know, running a traditional collection agency without the digital capability. And although we could have produced a nice landing page that looked like a digital solution, the secret sauce, or the AI that Jason's talking about, is really what separates Credit Clear from our competitors. So I think, you know, it'll be 70% plus collections are done digitally, you know, within the next 3 to 5 years.
Very good, thanks for that. Question in from Gavin, just on the UK expansion, and another question on the Techub expansion, both touching on the same point, perhaps for Jason. The integration into new jurisdictions, what's the status, and what's sort of currently being worked on?
Yeah, okay. So Techub, we're well advanced there. So we've deployed a copy of the platform locally into South Africa. We have to have a local copy of the platform in each jurisdiction for data sovereignty and, you know, compliance regulatory requirements. So we've deployed that. We've localized it for currency and language, and we're well progressed in connecting in with the communications and payment gateways. So we will, you know, have all of that together, as David said. Very shortly, we'll be sending messages there with the full platform deployed very shortly. So, and great result. We've done that really quick. It's full credit to the team for doing that. In terms of other jurisdictions, maybe I might defer that back to David in terms of the UK.
Yeah, well listen, we understand the model right now, and we're in early discussions reviewing with some potential clients, and that's multiple, so it may not just be one. It could be following some of our international clients that we have here in Australia into the UK. So there's discussions amongst a number of them. And we're also talking to potential partners in those jurisdictions to enter into an arrangement similar like we've done at Techub. And again, Techub is also keen to move to the UK too. So I don't think anything will be exclusive. And we'll leave our options open, but same thing, then there will be a period of time once we've committed to those and we know that revenues are going to be, you know, pretty confident the revenue is going to follow. We'll then make the investment through Jason's team to actually spin up another piece of the platform over in that jurisdiction and put in all the compliance codes. Now, it's not an insignificant cost, but it's not a huge cost compared to, you know, the actual returns you're going to get. So it's sub $500,000 of investment to get it up and running.
Okay, very good. Perhaps the last question for today is a sort of industry type question. The debt purchase market, coming from Gavin, is it growing? And I'll throw in a second bit to that question. Could Credit Clear potentially work for debt purchase market?
I'll probably take this one, David. What we've seen in the debt in the debt purchase market, it shrunk a huge amount over the last couple of years. Regulators and credit providers have made the decision not to sell debt the same way they had been selling in the past. Now, there was some pressure through, as I said, Royal Commission into banking. An example of that is Westpac used to have a workflow where they sell their debt on a regular basis to a debt purchaser, and they've completely stopped selling debt. So, the reports that I'm hearing from a number of the brokers that sell debt within that sector is that shrunk over 60% in the 2021 calendar year, and is on track to have the same sort of shrinkage this year. So the first part of your question is that I think that there's been a huge reduction in the amount of debt that's being sold across the Australian market, and that means that those credit providers are handling those customers internally. So that probably means that there's a better opportunity for us as CCR Credit Clear to provide services to those customers, because instead of selling the debt and to a lesser extent not needing to worry about as much, they've actually got to handle that debt internally, and they need digital solutions to do that, because not only have their international call centres been disrupted because of COVID, they're actually holding a lot more debt on their books. So we've seen heaps of our customers in the utility space in particular leverage our services to handle overflow there because of the fact that they're not selling debt anymore. The second part of your question around whether or not we can work for debt purchases, I think that we already provide solutions through Credit Clear to debt purchase businesses, and unless those debt purchase businesses are going to invest in the same level of AI and intelligent digital solutions, then they'll actually need to leverage a digital solution to help service a proportion of their books as well. So, ARMA and Credit Clear or Credit Solutions don't buy debt, so we don't see ourselves as competitors to the debt purchase market. So, absolutely, it's a good opportunity for us to expand our offering to.
Thanks,
I might
Andrew.
just jump in and
Yep.
I might just jump in, Warwick. We are actually at the late stage of finalising a contract with a large debt purchaser here in Australia. Anyway, so we'll be hoping to announce that in the coming weeks. So yes, it works. It's proven in there. We've done it before. Makes a lot of sense.
Very good. Perhaps some concluding remarks, Dave, from you, and then I'll just remind people that there will be a recording sent around, and I'm always happy to take calls from shareholders and investors that have any questions. So my details are on the screen. Feel free to reach out. David, just to wrap up.
Yeah, and thanks, guys, and thank you, Andrew and Jason. It's great to showcase, the strength of the team we've got and the capabilities. I keep saying, and I know some shareholders might be saying, when's it coming? When's this real, major uplift coming? I think we're almost there, and 2022 is going to be, and truly believe 2022 is going to be a fantastic year for us. Like I said, acquisition of ARMA, we've got a really great and really keen sales team. We've added a couple of people at the end of the year, so they're just getting into it too. There's lots of opportunities coming. Companies are moving out of their COVID restrictions, and it has dragged on, particularly recently. Andrew mentioned they get inundated with calls, late payers, and the companies just can't handle that volume. So they're saying, stop sending message. Can you restrict the messagings you're sending because it's driving too many calls? So, but that's going to play out over the next month or two, I believe. And of course, international expansion. It's a terrific time to be in the company, and I think it's be a terrific time to follow this journey as a shareholder. So, like I said, encourage you to have a serious look at that SPP before it closes. Thanks, Warwick.
Thanks, David. Thanks, Andrew, and thanks, Jason. Thanks to all your time. As I said, always happy to take a call. Enjoy the rest of your day. Bye.
Thanks, everybody.